The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Welcome to the Accunet Mortgage and Realty Show. I'm David Wickert, Chief Millennial Loan Consultant at Accunet Mortgage. Joining me today, same as last week, loan consultant Tim Holdman. Good morning, Tim.
Good morning, David. Happy to be back.
Good to be back again.
Yeah.
If any of you out there have a question or a comment, you can call or text us on the Accunet Mortgage Talk and Text line. That number, 414-799-1620. Tim, I missed a headline last week because on Friday the 1st, I thought the jobs report came out on Friday, November 1st. And
Yep.
I would have thought that the Labor Department wasn't going to have that ready in time because they usually don't. But this kind of goes into our opening segment here, the theme of good economic news and or the removal of uncertainty.
Yeah, and what that does to mortgage rates.
Exactly.
Right?
Okay, so last Friday, the Labor Department reported that the U.S. economy in the month of October added 128,000 jobs. That was above expectations.
Yeah.
The unemployment rate did tick up to 3.6%. But is kind of immaterial, I think, as I observe just driving down the highway. Businesses are looking to hire.
There are a lot of help wanted signs everywhere. Yeah.
So all good things. And there were journalists and economists who wanted to say, look, see, the October jobs report validates what the Federal Reserve is trying to do. And, I'd say, sure. I mean, it's good news, but maybe not exactly correlated. Overall, with regards to our business in mortgages and real estate, that continued good news is putting pressure on interest rates.
Upwards pressure, as our colleague Jerome Serkatich says.
Yes, and so we're pair that together with on Thursday the opening back and forth between China and the United States that some kind of resolution to the trade war seems to be imminent.
It's on the horizon.
Yes,
yeah.
So the Chinese government came out on Thursday and kind of said, we've got a deal to roll back the tariffs that at least China has in place as kind of phase one of some kind of trade agreement. And what was interesting is that neither the White House nor the U.S. trade representative, who's kind of the chief negotiator of the trade war items, agreed with what the Chinese had said. So all of that wonky information to say that what has held rates down the last 6+ months,
going on 6 months, yeah,
has been this uncertainty around the trade war between the United States and China.
Yep.
And for just to review, anywhere from $200 billion to $300 billion worth of Chinese goods are being tariffed by the Trump administration. I actually saw there was an article that the U.S. economy, Tim, you and me as taxpayers, we put $7 billion worth of tariffs into our pockets as U.S. taxpayers in the month of September. So, that's money that wasn't there before, but this increased friction in the global economy has held interest rates down. And so now that friction has been reduced, possibly, we watched the 10-year Treasury pretty closely because it's kind of a barometer of economic health. The U.S. Treasury has continued to rise. And as good news comes out, that the 10-year Treasury has risen, and it closed somewhere around 1.9% on Friday. Mm-hmm. And so...
And just to put that in perspective, David, where was the 10-year Treasury at its lowest point this year?
I think
it
was
1.42, 1.45?
Yeah, something like that. Yeah.
So it's a 0.5% already
increase
higher than it was at its low point for the year.
And we get this question a lot that are these things correlated? And I'm going to say they're related. They're cousins. They're not immediate family. Things like the Federal Reserve or U.S. Treasuries and mortgage rates, they're all at the Thanksgiving dinner table.
Yeah.
But they're not all immediately related
They're
to
not
each
siblings. They're like the distant
they're
uncle.
Italian cousins.
Yeah.
No, but at the end of the week, Accunet could offer on a 30-year fixed-rate mortgage 3.99% with an APR of 4.03. That would just be with $900 in cost. On a $200,000 loan, 25% equity, and all the other right stuff, which includes escrowing for taxes and a credit score of 740. That is up by about a quarter or 3/8 from, I'm going to say, the bottom in August, September.
Yeah, late August, early September.
But as always, it's all about perspective because this time last year, rates were a full percent higher.
We're doing 4.99 with cost.
At this same time last year. So it's all about perspective. And the way in which to take advantage of this news is let's not wait for more poor economic news to drive rates lower because I don't see it on the horizon. I'm not a prognosticator.
Yeah.
I just don't see what is going to drive rates lower. So I'd rather be able to deliver to folks an interest rate that still has a 3 handle on it today rather than play blackjack with my mortgage interest rate and hope that rates go lower from here. So that's kind of your economic world economy
rate roundup,
all tied up into a nice little bow here to start our show. When we come back, we are going to get an update from Tim on the lady that we were going to help her by not helping, but in fact, we're actually going to help her.
Yes.
You are listening
Good
to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Mortgage and Realty Show. I'm David. That's Tim.
Hello.
And after our wonky opening segment, trying to make sense of the world economy, I wanted to bring it back home here to a story we told last week that I particularly enjoyed describing it as helping by not helping. So to summarize, Tim, you spoke with a borrower who has a home to sell and is looking to buy their next one. And when all the dust settles, they're going to be getting such proceeds from the sale of their home that they're going to end up paying off or paying down anything that they might owe on their new home. And
right.
I think the update from there has been...
Yeah, so... I when I was thinking about the update for this, I almost equated it to on TV shows where they have to do like a fact correction from the previous show. Like, oh, we said this fact and we actually had this correction because it's not quite true.
Oh,
so
okay.
for us,
in a good way.
Yeah, in a good way, because the story is we were going to help this lady by recommending we not help her because she didn't want a mortgage.
Not help her
at the end
directly.
Of the day.
We
Yeah,
still wanted to connect her with someone who could.
Yes, and with someone who did some more short-term financing because she was downsizing, and ultimately at the end of the day when the dust was going to settle, we thought she was going to have enough proceeds from the sale of her bigger home to where she wouldn't need a mortgage on a smaller home. So that's what we talked about last week. The update and sort of the correction is as more things came to light, we realized she was going to be cutting it pretty close with the proceeds from her sale in relation to what money she needed to buy this condo.
And she was going to be buying the new one before she might be selling the old one.
Correct.
Okay.
Right. So, when we talked about it more with her, she said, well, it's not the end of the world if maybe I do have a small mortgage at the end of this thing, maybe for 30 or 40 grand, if only because, she even said, well, what if I want to buy some new appliances, some new furniture,
invest in the new home a little bit.
Yeah. And I said, hey, that's a good idea.
That requires money.
Yeah. And, one of your bad jokes is, once you put money into the down payment or the purchase of a home, you can't pry dollar bills out of the floorboards of your house anymore. You're getting that money back only when you sell the house or if you do some sort of cash out refinance. So why bother doing that if you can just keep the money out already as part of buying the house by doing a mortgage for it. So,
well, when it's cash from the sale of your home, you're paying 0% interest on the cash in your checking account,
correct,
as opposed to borrowing it against the house.
So me and Brian, our boss, and
you were
president
talking
of
about
Accunet,
you got some Jagundis conference call.
We had like a 6-way phone call going between me, Brian, our borrower, her finance advisor at Edward Jones, her son-in-law, because she wanted some family help, and
the agents,
and the agents,
or the buyer's agent, probably not,
and we consulted and came to I think the best possible game plan for our borrower, which is actually now us doing a mortgage for her, so that she has liquid funds left over to do all the things she might want to do after she downsizes to this new home.
And that's good. What I enjoy is helping there be less stress when it comes to people getting into their next home, because what she's reserving the right to do is, okay, we're going to help her buy her new home. She is going to sell her old place and have money sitting in her pocket, and then she can decide at her own pace, at her own time, either how she wants to spend that money, where she wants to spend that money. Because let's just say she sells the house 3 months and has moved in, and boy, she cannot sleep at night. If she's got a mortgage on her new place, it just makes her nervous. She can go ahead and pay that mortgage off, and God bless her. I mean, it's, financially speaking, not what I would do personally, but if I just enjoy that in this scenario, she's not going to feel rushed. Because, I mean, moving can be emotional.
Yeah.
You're getting to a new place, you're trying to get comfortable, and then trying to make big financial decisions that maybe you haven't had enough time to think about yet into the mix. That sounds nerve-wracking.
It's a lot. And while we were on the call with her financial advisor from Edward Jones, they made a great point that I know Brian has talked about on the show in the past, which is mortgage rates are so low right now. She was going to, if she were to buy this new place in cash, she would have had to pull some money out of some retirement accounts and IRAs that she had.
Sure.
And the Edward Jones person is like, listen, if you can get a mortgage at, 3.75%, that is found money compared to the amount of, return that your investments are getting right now.
If you borrow at 3.75 and you can earn 6, that's called being a bank, the bank of you.
Exactly. And, this lady said, well, that makes sense. And if, she's comfortable with the mortgage payments being what they are, in the long run, she is going to actually still be making more money by keeping money in investments and having a mortgage compared to liquidating those investments to not have any mortgage at all.
And do it fast, when maybe fast doesn't always mean best.
Right.
So all good. All right. Well, I'm looking forward to an update as the weeks roll by on this one as well. So when we come back from this break, I would like to tell 2 good stories about make sense lending, and or how sometimes we don't get to do make sense lending at Accunet Mortgage. It all works out in the end, I promise, but some heartburn in the interim. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Weckert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. We have kicked off. I'm David. That's Tim.
Hello.
We have kicked off today's show, segment 1, a little review on the world economy. Segment 2, Tim's story, helping by not helping, but now we're helping. And I wanted to get in now to 2 stories on make sense lending, or sometimes it makes no sense.
How it doesn't
lending.
make sense.
Yeah. As Dad says from time to time, for mortgage lenders like Accunet, we are actually in the mortgage manufacturing business. We manufacture PDFs that fit the protocol, the specifications of
Fannie Mae.
big companies, Fannie Mae and Freddie Mac. Because as a review, mortgages at Accunet turn into investments on Wall Street, and so investments have to meet a certain manufacturing protocol. And from time to time, we stumble into scenarios where it's like, I would lend people my money. Like these scenarios make so much sense.
Just makes sense.
But just maybe don't fit the manufacturing mold. And I've got two examples for you. So one, we were successfully closed a purchase this week for an elderly lady who had multiple millions of dollars. We had bank statements. There was more money than she would know how to spend between now and D-Day.
Which means if she wanted to, she could have just straight up bought this home in cash.
Correct. And wisely, her financial advisor, who had worked with us in the past, had said, no. You are going to call my friends at Accunet, and they're going to line up a mortgage for you. And what we had to get past, there was a lawsuit involved, and what we had to end up pointing out to the underwriter, I was relaying this to someone. It's like she needed to bring, it was like a $400,000 purchase. She needed to bring $100,000 for a down payment and could cover a potential liability as well for another dollar amount, but her assets could have covered all of that like 6 times over. And so just a reminder to folks that it's for the trophy rates that are available through Fannie Mae and Freddie Mac, you get to play by their rules. You get to dance to their fiddle.
For better or for worse.
Yeah, for better or for worse. And, thankfully we got the job done.
Yeah.
I was relaying this story to a friend of mine, and they were just like, that doesn't make any sense. She's got more money than God, and, why not?
And we agree with that because
as a human, it's like, hey, in real life, I'm with you, like, absolutely.
Yeah.
But in mortgage life, it's like we have to play by the rule book.
Yeah. And, we come across this situation on the front lines all the times, and I tell this to people, is that we are really good at what we do in figuring out any possible way to fit you into that Fannie Mae, Freddie Mac specification mold.
Yes.
So if there's a way, we're going to figure it out, but there are just going to be some situations.
We have incentive to figure it out.
Yeah,
like,
we
really
want to. But, there's just a couple of times there are rare situations where, like David said, we would lend you our money if we had it.
Right. Tim and I are going to go play guitar on the street corner and raise money.
We're
so
going to go
lend
to
it to you
Pato.
because that's how much, less of a risk you are. My other story has to do, again, in the realm of make sense or maybe not make sense lending, has to do with declining commission income. And so for this particular borrower, had a perfectly strong, let's keep the number simple, made $100,000 in commission in 2017, made $100,000 in commission last year in 2018. And we gather a year-to-date pay stub to be like, hey, in 2019, is it the same or better as it has been in previous years? And for this borrower, their commission income was going to be about half. So $50,000 of what it was the previous year. And, it always, hey, if you're making less income this year, that hurts. And then for somebody to point it out to you probably hurts double.
Yeah. When you're trying to get a mortgage and borrow thousands of dollars.
It's just what I understand. If your pants from last year or the year before don't fit, you don't get to claim that they fit in 2019. I didn't use that metaphor, but I thought about it after I hung up the phone. And
you gained some weight.
You gained some weight in
Someone's
2019 for your commission income. And so, unfortunately, from what happens is, we don't get to use your income from the year before. We need to prove that the commission goose that lays the golden egg continues to do so. It's great that it did in 2017 and 2018. And as this gentleman, as he pointed out to me, he's like, I have made every on-time payment on my mortgage. I said, I get it. He said, I have $1 million in the bank. I could just go pay this thing off if I wanted to. I said, I get it.
Yeah.
This is not about make sense lending. And I'm sorry on behalf of, the mortgage world or part of it. But for us, we need to come up with a game plan that in this snapshot in time today we can make this work. It's kind of like it's like renewing your vows. It's like you're refinancing again. We need to make sure that you are still a steadfast repayer,
right?
Not just the first time you got hitched with your mortgage or some tortured metaphor like that. So those are our stories about Make Sense Lending. When we come back from this break, Tim, I wanted to talk about your winter home buyer, and helping folks buy here as the snow begins to fly. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
We are halfway through the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Good morning.
And I want to get into, even as the snow begins to fly, home shoppers are trying to still become home owners. And because guess what? There are still homes that are listed for sale.
Yep.
And I have a theory. Well, let me back up. As Brian notes a lot, making yourself the strongest, most attractive version of yourself as a home buyer is what's going to help you win. And there are some things that are the kiss of death when it comes to competing against other possibly strong home buyers. One of which, and the topic of this segment, is a home sale contingency, which is, hey, seller, I would love to buy your home.
But I got to sell my home first.
Right, but before I do that, I have to sell my home, and you have to hope that I have it organized enough that I can sell my home fast enough. And put yourself in the shoes of a seller. It's like, I don't want to wait for the buyer of my buyer's house to get it organized to buy my place.
Because what if something goes wrong with that transaction? Your transaction is hinged on that one going
smooth, or at least getting done.
Just happening. Yeah.
Well, and so here we are getting into winter months, and I think I'm going to paint with a broad brush that if you're selling your home in winter months, you're doing it on purpose, or you're doing it for a reason. I guess compared to having to move or be organized, right, when it's nice outside.
No one wants to move in December.
Right. Yeah. Although you did, if I recall correctly.
Yes.
But anyway, so Tim, you have a home buyer, though, who got an accepted offer with a home sale contingency, but...
Yeah, so... there's a little bit of caveat to this story, but David is right.
They made their home sale contingency less ugly.
Yeah, less ugly. He got an accepted offer with the quote unquote kiss of death, as we call it. But the caveat is that he already had an accepted offer on his home that he was trying to sell at the time that he wrote an offer to buy the next property.
Been naked, or have to have moved out of his house. Which is not the worst thing in the world by any means. But
no.
Have to move into an apartment or family or something.
Yeah, and the key thing, too, that I think his realtor communicated to the sellers, which helped strengthen his case, is that not only did he have an accepted offer in his home, but that they had moved past the home inspection negotiation phase of that accepted offer, which, if for anyone who's bought or sold a home, that's kind of a big hurdle to get through, is that the home inspection has happened and buyer and seller have agreed on this house doesn't need anything to be fixed, or they have agreed that some stuff's going to get fixed and it's going to get done. Everyone's on the same page. They're moving forward. That's a big hurdle to get through. And when he presented his offer to the house he wanted to buy, he said, hey, look, I do have to sell my home first, but someone has already agreed to buy it, and they've already agreed with me on the home inspection items that we're going to take care of.
Okay.
So that made him, I think, a little bit more desirable, and just that combined with the fact that it's closing in December, and there probably just aren't quite as many house hunters out there, I think helped, get him that accepted offer.
Did he have to write above the asking price? Do you know?
Don't want to say this too loud over the radio. He actually got an accepted offer under the list price. This is I even told him, I said, hey, I have not seen too many of these this year. The house had been on the market for, I think, 100 days or so. That might have had something to do with it.
Maybe a confluence.
Yeah, it was a culmination of many different things. He had he had the rock solid pre-approval.
I've heard of this rock solid pre-approval you speak of.
The pre-approval had 20% down on it. He had a lot of the other right things, that sellers look for.
Beyond maybe it was the half kiss. It was the peck of death.
Yeah.
with the home sale contingency.
Yeah, and he's, we've got it lined up so that he is closing on the sale of his home the morning of a day in December, and then literally that afternoon he is closing on the purchase of his new home. So it's a bang bang thing. He's going to have his home sale proceeds wired directly from his home sale closing right to the closing table of his purchase. So the money is not even going to hit his bank account.
He won't even be able to get a whiff of the money that's moving.
But he's okay with that. They got the home they wanted. It was he started house hunting in late summer. He's been looking for a while, and the inventory
actively
pretty actively. Checking in with him every couple of weeks, and this was the right house, and I think everything just kind of fell into place perfectly where the time was right.
Right. So if you've got a big zit on your face as you're trying to make an offer, but you can be pretty in other ways as a buyer, 20% down, strong, and pointing out the other. Hey, I recently, waxed my eyebrows or something like that as a buyer.
There's all different kinds of makeup.
Absolutely, that we can put on your pre-approval.
Skin toner, moisturizer, a lot of things.
Well, thank you for listening to Metaphor Mortgage this morning, so all good. All right, well, I'd be interested. Good stories today. I'd be interested to see how things progress, but because he needs to still get his financing commitment on the sale of his home.
Correct.
So, not all the way through the hurdles, but, like you said, it's not like it's getting spiked because of a bad basement on his old house or something.
Right. I will definitely keep you posted, because by the next time we talk, maybe he will have loan commitment on the sale of his home.
All good. All right, when we come back, I would like to tell a story about a couple and their financial advisor who had reached out to us to help mom buy a house. A good story. Kids helping parents, kind of like we are today, but we'll save that for another
in a different
time.
way.
So, you're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Almost done here at the Accunet Mortgage and Realty Show. A lot of good stories. People helping people. I'm biased because I'm a retired financial advisor myself, but I just like it when we have the opportunity to.
We've had a couple stories where we partner with financial advisors, and it's a beautiful
they want to
thing.
help their clients.
Yeah, and so do we.
Yeah. So I think this is your story.
It is.
Or at least your clients. These folks, back me up on this. So, professional couple. Who have some assets and are looking to help 80-year-old mom. Were they trying to get mom to move closer to them, or was it?
Yeah, close by, and they sit down with their financial advisor and just said, hey, our full financial picture. Here's what we want to do. We want to help mom. We want to help her buy a house or buy a house for her so that she can be closer to us. Mm-hmm. How do we do that? And the financial advisor smartly called Accunet Mortgage and said, hey, I got these clients that are looking for guidance. I know the smart thing is for them to, keep their assets making money for them and not just to liquidate it because they could buy a house 6 times over.
For cash.
Yeah. So what are their options? So I met with them, and ultimately we figured out the best thing to get them the most competitive rate and best rate of interest on the borrowed money would actually be to collateralize the money against their primary residence, because it's all borrowed money, but money borrowed against your primary home is going to be at a more competitive, lower rate compared to if you use an investment property as the collateral.
And they didn't want to try to put grandma on the mortgage. They kind of just wanted to make life easy for her and focus on moving in, basically.
80-plus-year-old woman, not hip with e-signing, not hip with pulling bank statements online. It would have. Yeah, and they wanted to move relatively fast because they wanted to have money available to snatch up the right property when it came along. So we got the ball rolling, and they had a lot of equity in their home, and we essentially.
Was their primary home free and clear? Or nearly?
Nearly free and clear.
Okay.
Had a small mortgage remaining on it. Ironically, we were able to get them a better rate on that mortgage as well. So kind of a win-win for them. But basically what we did is they have been searching for a home for their mom. They haven't even found one yet, but they wanted the money on hand and ready. So
ready to strike.
Yeah, so we did, it's called a cash-out refinance. closing next week on that, so they have the pile of money ready to literally be the absolute strongest buyer possible, which is a cash buyer. Says, hey,
I have my checkbook here.
I have a big bag of money. I'm coming with
in my car.
Gold coins, like Scrooge McDuck, to the closing table to buy your house in cash. That is what every seller wants. So they're going to be ready to do that next week, and their financial advisor is happy because they know that we're going to use.
Well,
round
we
numbers.
made the financial advisor look good too.
Yeah, because we're going to use fake, round numbers, say $200,000 that they're going to have. That money is going to stay in their investment account and make them double the rate of interest that is going to accumulate on the mortgage.
Right. Well, and I think, as you said, it's all borrowed money. So, because they could, just to keep it simple, let's borrow money at 3.5% on your primary home rather than 4.5% on a non-owner occupied condo for your grandma. It's like,
right.
Like, why?
Yeah.
Why do that to yourself?
And not to mention the terms of getting a loan approved are typically easier on a primary residence, when you're talking about.
And it's a refinance. There's not a seller involved with their own emotional side of things.
Exactly.
Either.
Yeah. It's a great way to do things for the people that the parameters fit. Obviously, everyone's situation is a little bit different.
And maybe, like you said, maybe you would have split the difference. Maybe they couldn't have cashed out all that they might have needed for grandma, but maybe if it got them halfway there, hey, we need $200,000 for grandma's, new place. We can take $100,000 out of ours and liquidate $100,000 from the investment account rather than all from the investment account.
Yeah.
Well, because I think, I'm sure they want grandma to be around for a long time too, but I think they also think to themselves, we're doing right by grandma, and we're going to get this money back when she no longer lives here. Maybe she passes away or moves into a
assisted
nursing
living
home facility.
Exactly. Right.
So good. All right. When we come back from this last break, I have an article that I wanted to review on kind of the 5 things I wish I knew when I refinanced. And when I read this, I was like, oh, we need to talk about this more as folks think about refinancing. So we'll come back after this last break. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the last segment of the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Good morning.
And I wanted to close out with an article by Ashley Abramson for Business Insider that I saw this week on the 5 things I wish I knew when refinancing my home. And Tim, you were saying off the air that it is our duty to make things into plain English.
Yeah, and I'm got to be constantly vigilant to not fall into this trap of, even though I wasn't born into the mortgage world like you were, David, I was adopted in, several years ago. When my wife and I bought our first house, I wasn't yet in the industry, and I want to explain things to my customers as if this makes sense or not, as if I don't work in the industry still, because I want to use plain English and explain things to them as if, there's no reason you would know these details.
Yeah.
Because it's uncharted territory for most people.
There is no mortgage class in high school or college.
Correct.
But there is on Sunday mornings on 620 WTMJ.
There you go. Good
when
plug.
the Packers aren't playing at noon. So thing number 1, you're not locked into your mortgage interest rate. And again, you only know what you know, to quote my grandmother. But these folks had bought their house in 2017 and they thought, we're stuck. And it's like, no.
You're stuck as long as you have that mortgage, but refinancing.
Stuck in a good way if suddenly rates go up higher, then you feel like a champ.
Yeah, but if rates go lower, you're not stuck if you want to refinance, because literally a refinance in the simplest of terms is replacing one mortgage at its rate with a new mortgage, ideally at a lower rate of interest and therefore a lower monthly payment.
Or in some way different, shorter.
Yeah, shorter, maybe cash out, a lot of different reasons.
All right, thing number 2, your private mortgage insurance, or PMI, can significantly decrease when you refinance. This author lives in Minneapolis, which has seen some very strong home value growth.
Do we lend there too?
We do.
I think we do.
In the Twin Cities. And so what she just points out is, hey, if I get rid of my monthly PMI, man, that plus maybe a lower interest rate, that is the double whammy of awesome.
Payment relief.
Yeah, for payment relief. So, and I know we've seen that with customers. In yeah. So getting rid of your monthly PMI, also a way.
Or cheapening it.
Or cheapening, yeah, sharpening that cost. Yeah. Number 3, an appraisal amount won't necessarily be the same as your home's market value. She had noted that she made the joke, when we got our appraised value, she thought to herself, we should list our home for sale right now and get some quick cash. And, that is true. But, again, the value of your home is what someone is willing to pay you for it when you want to sell.
Which could be different in either direction compared to when you get an appraisal for a refinance, because there's no starting point already set for an appraiser to go off of with a refinance.
They're just going off of what your neighbors have sold for.
Yeah, versus with a purchase, they already know what two parties have agreed on for
they
a
have
value.
The contract in hand.
It's called a purchase contract.
Yeah. Number 4, your loan amount can actually go up, which I kind of disagree with how she phrases this, but it's you're not obligated. If there are costs associated with your loan, if you decide to pay points to buy down the interest rate or finance your property tax escrow account rather than fund that yourself. You can include those things in your mortgage payment. You are not obligated to, though. I would say 7 out of 10 folks do like to include that in their loan because, again, the cost of rolling it in rather than bringing the straight cash is
most people
nominal.
would rather not bring it to the closing table. And, there's also the piece of interim interest, because usually when you refinance, you're skipping a month where there's no payment either on the old loan or the new.
Right.
But the clock never stops ticking on interest,
on the
daily interest accumulation. So it's one of the things a good expert loan consultant at Accunet Mortgage can explain when giving you some quotes.
We'll go as granular detailed as you like.
Down to the penny.
And the last item was you might not want to refinance if you plan to move soon. And her note was, we had thought about selling in the next year or two. She was going to save $200 a month. I was like, well,
I would rather save that.
I would rather save $2,400 in 1 year than not. But I get it.
And the caveat is that's if you can do a no-cost refinance, which that's usually what we're on the lookout for at Accunet for our customers. If we can refinance them and do a lower rate with no loan cost, that's the big factor. If you're investing cost, she might be right. You might not want to make that investment.
Might be longer.
Yeah, because if it takes a couple years to break even, you're going to sell anyways. May not be worth your time.
To find out how much you can save with a no Social Security required mortgage checkup or get going on a rock-solid pre-approval, because even though the snow flies, there are still good homes for sale. All you got to do is click on the blue button at Accunet.com. That's ACCUNET.com. I'm David. That's Tim. That's all the time that we have for today. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.